Assalamu alaikum everyone. Welcome back to my channel. This particular question is from May-June 2025, paper 2 variant 2. It's question number 3. It's kind of an incomplete records question. They're asking you to prepare three T accounts in this particular question. One of them is depreciation, provision for depreciation, provision for doubtful debts, and rent and rates account. Um, Also, if you guys haven't subscribed to my channel yet, please subscribe to my channel so that you can get updates about O level and IGCSE accounting and A levels AS level accounting. Also, one more thing, if you haven't followed me yet on Instagram, you can follow me on Instagram at Rapid Revision with Cheyenne for more content from O level and IGCSE accounting and economics and AS level accounting. So the question here says, Jasmine owns a consulting business. So consulting businesses are basically service businesses, right? So then they're saying at 1st April 2024, Jasmine's ledger accounts included the following. They have motor vehicles for $16,000. They have provision for depreciation of motor vehicles. So this is like opening provision for depreciation. So it's like accumulated depreciation at the start of the year. Accumulated depreciation at the start of the year. Then they are saying trade receivables are 12,220. This is opening trade receivables. Then you have provision for doubtful debts 366. They have given you rent prepaid. So there is a balance brought down for prepaid, that is 900. So last year there was some amount of rent which we paid extra for this year. This is the current year, that is 1st April 2024 to 31st March 2025. And then there's rates unpaid, which is last year there was some service that we had taken already, but we did not pay for that. So this is like owing. We are supposed to pay this. Then they're saying during the year ended 31st March 2025, Jasmine's bank payments included the following amounts. They've paid for new motor vehicles, that is 18,000. They've also paid for rent and rates, which is 14,960. Then they've given you additional information. Depreciation is to be provided at 25% per annum using the reducing balance method. A full year's depreciation is to be charged on vehicles purchased during the year. So the first part is also actually make the provision for depreciation account. So this is you need to apply the formula of reducing balance method. So the cost here is 16,000 and the accumulated depreciation is 7,000, and then you multiply this by 25%. So this is going to give you 2250. So 2250 for the old motor vehicles, and then the new motor vehicle has a cost of 18,000. Accumulated depreciation is zero on the new motor vehicle because we just purchased the new motor vehicle. And then when you multiply this by 25%, you will get 4,500 for this. So that means the total depreciation for all the motor vehicles that we have at the end of the year is 6750. So we can actually prepare the provision for depreciation account. We have all the information that is needed for the provision for depreciation account, because these three points are for the other T accounts that you need to make, that is provision for doubtful debts account, and then there is a rent and rates account as well. But for provision for depreciation account, since provision for depreciation is a contra asset account, contra means opposite, and contra assets have a balance brought down on the credit side. The total depreciation at the start of the year is 7,000. So I'm going to start with that $7,000, and I'm going to write here April 1, 2024, and then I'm going to write here income statement. So income statement is the amount for income statement is 6750, which I'll write on the credit side of this account. Income statement. Also, the new name for income statement is statement of profit and loss, which if you guys look at the specimen paper 2027, you will see the examiners are no more using the word income statement. They are using statement of profit and loss instead of income statement. You're going to write here March 31, 2025. And then there will be a balance carried down. So there is no disposal during the year, so you'll directly calculate the balance carried down. The balance carried down will be 7,000 plus 6750, which will be 13,750. So I'm going to write here 13,750. I'm going to write here March 31, 2025. And this basically account will total at 13,750 on both sides, 13,750. and then this balance carried down will become my balance brought down. I'm going to write here balance brought down 13,750. This will be April 1, 2025. So that's it for the provision for depreciation account. Okay, so the next requirement here is to make the provision for doubtful debts account. So I need to work out the provision for doubtful debts. The trade receivables at 31st March 2025 were 11,800. An amount of 300 is still to be written off. So you guys have to write that amount off. So 11,800 minus 300 multiplied by 3%. So when you calculate this, 11,800 minus 300, and then the provision for doubtful debt is to be maintained at 3% of net trade receivables. So now when you calculate this, 11,800 minus 300 multiplied by 3%, you will get a value of 345. So the provision for doubtful debts has reduced because the opening provision for doubtful debts was 66 and the closing provision for doubtful debts is 345. So when you make a T account, you will basically show a reduction in provision. So you will start with the balance brought down on the credit side. Again, provision for doubtful debts is also a contra asset account. I'm going to write here April 1, 2024. I'm going to write here $366. And then I'm supposed to write here income statement on the debit side. I'll write here income statement. And this will be 366 minus 345, which will be $21. $21. I'm going to write here March 31, 2025. And then I'm going to write here balance carried down. So balance carried down, and this will be 345. I'm going to write here March 31. Again, the date will be March 31, 2025. The account will balance at 366 because the total will be 366 on both sides. And then this balance carried down will become my balance brought down, 345. And a reduction in provision is always an income in accounting. It basically is part of the income section of the income statement. So that's it for this part. In the next part, they are asking you to prepare a rent and rates account. So in the next part, when we are preparing the rent and rates account, we are going to apply this rule, which is called POOP. This is basically the rule for expense accounts. And if you have a balance brought down for prepaid, it's going to come on the debit side. I'm going to write here balance brought down, and I'm pretty sure it's rent because I have read the question. Rent prepaid is 900, which is the opening balance. I'm going to write here April 1, 2024. I'm going to write here balance brought down rent, and I'm going to write here 900 on the debit side. And then they have rates unpaid, which means rates is outstanding from last year. So I'm going to write here April 1, 2024 balance brought down. In the brackets, I'll write rates, and this will be $270, which is the balance at start for owing rates. And then during the year we have paid rates for 14,960. So I'm if you pay rates, right, so bank will be credited, so this account needs to be debited. I'm going to write here bank, and I'm going to write here 14,960. This is what we have paid for rates, so I'm going to write here March 31, 2025. And then their balance carried downs as well. So for rent, again there is a prepaid at end, so 31st March 2025. So it's like this: P O O and then P. So that means balance carried down for prepaid is supposed to come on the credit side. I'm going to write here balance carried down, and I'm going to write bracket rent, and I'm going to write here 925. I'm going to write here March 31, 2025. And then I'm going to write balance carried down for rates on the debit side. This is owing carried down, that balance for owing for rates. So this year there was some service that we have taken, but we haven't paid the full amount for that. So that basically becomes my owing unpaid rates, which is 185. So I'm going to write here 185, and I'm going to write here March 31, 2025. This is also my ending balance. And then I'm supposed to calculate a value for income statement. Again, one more thing, that the new name for income statement has changed to statement of profit and loss. So if you guys are appearing for your exam in May, June 2027, you guys will look in the paper, you guys will see that they have used the word statement of profit and loss for the specimen paper 2027. So I'm going to write here March 31, and this is going to be 2025, and this income statement value I'm supposed to calculate. So how do I calculate the income statement value? So it's very simple: 900 plus 14,960 plus 185 minus 270 minus 925 will give me 14,850. This is my income statement value, which I'll charge for rent and rates in the income statement expenses section. So I'm going to balance this T account. My total will be 16,045 on both sides, 16,045. This balance carried down, so balance carried down for rent becomes balance brought down. This is prepaid at start of 1st April 2025. So I'm going to write here 925. I'm going to write here April 1, 2025. And then again, I'm going to write here April 1, 2025. And this balance carried down for owing rates. Basically, these were owing rates, and this will become balance brought down for the next year, which starts on 1st April 2025. I'm going to write here $185. Okay, that's it for rent and rates. And then they have asked you to prepare a current asset section of the statement of financial position. So they have also told you that their Jasmine has a bank overdraft of 2620 of at 31st March 2025, which is a negative balance, right? Negative balance, negative bank balance. So negative bank balance is a current liability. You guys know, all of you guys already know bank overdraft is a short-term loan. But if we make the current assets section, so I'm going to write here current assets on top, and I'm supposed to make I'm supposed to start with inventory, but normally I start with inventory, but in this case, because it's a consulting business, I don't have inventory. So I'll start with trade receivables. I'm going to write here trade receivables. The trade receivables amount will be 11,800 minus 300, which is 11,500. So I'm going to write here 11,500. Then I will write here less provision for doubtful debts. So I'm going to write here less provision for doubtful debts, and this will be 345. So I will basically calculate this. The net trade receivables after deducting the provision for doubtful debts amount will be 11,155. This is my net trade receivables. This will this will be part of the current asset section. And then there are other receivables, right? So other receivables at 31st March 2025 is $925 for rent. So this is exactly my other receivable, which is also my, it's like I'm preparing my statement of financial position at 31st March 2025, and at this date we have prepaid rent for next year, right? So $925 is prepaid. So I'm going to write this other receivables 925 as my prepaid rent, and then when I add both of these, so I will get 12,080 as my total current assets. In the next part, they're saying state how the principle of consistency is applied when charging depreciation. So the method of depreciation the method used for depreciation should be the same every year. That is basically the principle of consistency, that you use the same method of depreciation from one year to the next. Part 2 is one way Jasmine could reduce the possibility of irrecoverable debts, refusing to supply goods to customers until their outstanding amounts have been paid. So let's say we have a customer who hasn't paid the outstanding amount for very long, so we will refuse them. We will not supply them goods on credit unless they pay us the amount that is outstanding. um, the third one here is which accounting principle is Jasmine applying by making an adjustment for rent prepaid. The principle for prepaid and owing, whenever we are actually adjusting for prepaid and owing, the principle is accruals and matching principle, which she's basically applying on rent prepaid for like by making an adjustment for rent prepaid. So that's it for this question. Hope this helps you. Thank you so much for watching.